The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, ladies and gentlemen. Welcome to Tech Webinar Series, our endeavor to empower you with insights on the Indian real estate market performance and consumer sentiments on property prices in the next 6 months. The topic of today's session is Delhi NCR and Kolkata, No Buyer-Seller Sentiments and Property Trends. And our guest speakers today are E. Jayashree Kurup. She is the head content and research with Magic Bricks, and Dr. Venkatesh Panchapagisan. He is the associate professor of finance and coordinator with IIM Bangalore. Jayashree Kurup is involved with a number of global research initiatives and specializes in analyzing research data to provide usable solutions to users. She also works with business in using industry dialogues with senior management in her domains of expertise to generate content solutions that keep audience and industry engaged. She has been a business journalist for over 2 decades with the Times of India, the Economic Times, and the Financial Express. She writes extensively on real estate and infrastructure, city management, information technology, HR, and management. So, without further delay, I introduce you all to our guest speaker. Over to you, Jayashree.
Thank you, Aradhana. Good afternoon, ladies and gentlemen. Welcome to the Magic Bricks PropIndex and Housing Sentiment Index webinar. The PropIndex, as many of you know, is an index of listed property values, both for capital as well as rental values across the country. These are evolved from the back end of Magic Bricks, which means that we use listings data across localities in different cities. We also use the demand posted on the site by users, and we use this as to evolve a 11-city index. There are special cities that we include every quarter, and that is the 12th city that is included. This time we are doing a special focus on North and East region. So what is the PropIndex? It is actually a tool which provides detailed information on price movement, supply, and user demand for multi-story apartments, single floors listed across cities. You can go to propindex.magicbricks.com to use the PropIndex, download and use the PropIndex. So what all does the PropIndex show you? It shows you the National Property Index. It shows you city property indices. It shows you the listed price monitor city-wise. It shows you a rent monitor. It gives you an yield meter, which is the price over rent ratio. It shows you the top preferred localities according to demand. It shows you demand and supply analytics. For instance, in a locality, how does the demand and supply compare with each other? It shows you the locality price ranges. What are the ranges within which you can get properties? There are localities where you can get between, say, 4,500 to 12,000, depending on the type of property, the size of property, and so on. You also get reality news, essentially policy news in the city that impacts the real estate market. So let me talk about the North and the East. What were the key findings in the PropIndex for the previous quarter? This is the April to June quarter. Gurgaon and Kolkata city indices rose by 1%. Actually, the PropIndex remained fairly stable across most cities. Delhi was the only city which posted a big drop in property values. That is the National Capital Territory of Delhi, while the NCR region rose by 1%. Ghaziabad and Noida remained unchanged. It was exactly the same as the previous quarter. And about 80% of demand was recorded for apartments across the North and East region. So both in the Delhi NCR as well as Kolkata, it's apartments that constituted about 80% of the demand. There was maximum demand for 2 BHK units across all these regions, except in Gurgaon. And Gurgaon is actually a very different market from the rest of the NCR as well as the eastern markets. In Gurgaon, 55% of the demand was for 3 BHK units. That's in line with the profile of the city, because that is a city that is driven by professionals. It is a hub of corporate and IT, and therefore a lot of professionals, well-earning professionals, are the buyers there, which is why the demand is for 3 BHK. Plots were the second most preferred category, with the highest demand in Gurgaon, about 27%, and 11 to 14% demand in the other cities that we talked about. Now, this is a very significant finding in the PropIndex. When the market conditions are good and consumers are, the end users are looking at buying for self-use, it is the apartments that go up. But in the last 1 to 1.5 years, the property markets have been awfully slow. Hardly any pickup has been happening in the property market, and the April to June quarter is when the buyer has started taking small baby steps towards investment. The first investment is always land, because land is a safe investment. It appreciates faster. But land is normally the category where small investors invest in, and that's why land has plots have been picked up, even though maximum demand was for apartments. And when we talk about demand, that does not mean that maximum transactions were for apartments. A lot of consumers are today scouting the market, looking for the property that they want, and that constitutes demand. Transactions are still slow in the market. Let's go city-wise. Delhi, the city index dropped by 4%. There is a big reason for this. In Delhi, there has been a lot of speculation over the Delhi Development Authority's land pooling policy. And because of this, there have been the Najafgarh area where a lot of investment has been funneled. As a result, people are waiting and watching to see what the impact of the land pooling policy will be on the Delhi city. Also, there are small experiments happening, 3 experiments happening in Delhi, where old DDA colonies, which are roughly about over 40 years old, where the residents have got together and are starting small redevelopment initiatives. This actually means that the city is poised for redevelopment, which means there will be a lot more stock in the city. Therefore, the buyer is going slow. Only end users who want to stay there are buying today. The return on the investment is roughly about 1.53 to 3.6, not very great compared to the national averages, but that's the return right now. It's a slow market. Delhi is a very, very slow market right now. Uttam Nagar and Subhooding Enclave are the 2 areas where there was maximum increase in supply. This is in line with what we found in the previous prop indices, where the Delhi Metro and the march of the Delhi Metro has actually opened up new areas for development. In the very, very crowded West Delhi areas, where Janakpuri, Vikaspuri are all, well-established areas, Uttam Nagar was actually a resettlement colony or a lower middle class area, where because the metro came, there has been huge amounts of change in the profile as well as the kind of development that's taking place, and Uttam Nagar has seen a massive increase in supply. Subhooding Enclave is another area where because of the new metro links that are coming, Subhooding Enclave is actually seeing a lot of redevelopment. This is anticipating the new metro links that are coming up. 50% of the localities in the top 10 preferred localities were in South Delhi. South Delhi is getting a revival, a redevelopment, and a revival of interest. Unlike the supply, there was a healthy demand across different budget ranges, right? There was almost equal demand for 2 and 3 BHK units at 44 and 41%, so this is a big demand. West Delhi offers maximum options across all budget ranges. Now, we've also included some charts here, which you can visit at your leisure. Where we're telling you that if you have a budget of up to 20 lakhs, which are the areas where you can get properties in Delhi. If you have a budget of 20 to 40 lakhs, 40 to 100 lakhs, 1 to 2 crore, 2 crore and above, what are the areas in the city where you can get properties? Let's go on to Gurgaon. As I told you earlier, Gurgaon is a very different market from the rest of the country actually. And a whole city is driven by real estate, and real estate is at the heart of the city's growth. The city index rose by about 1%. There was a small drop in capital values, which was actually a correction of the huge rise in the previous quarter. The city offers much better return on investment at 2 to 3% return, which is expected to remain at those levels for the next couple of quarters, I think. Sona Road continued to be the most preferred residential locality in the last 1 year. After the Sona Road became a state highway and saw an upgrade in the quality of roads, also the connectivity has been improved, and there has been an announcement of how the metro is going to connect Sona Road as well. So these are the reasons why Sona Road is preferred. It is easily accessible from the expressway as well as from the metro station. Therefore, it is convenient to stay in. The supply of apartments has outstripped demand. Demand has actually not dropped, but the supply during the slowdown, all developers have actually constructed the apartments that they had launched, and therefore there is huge amount of supply in the market in Gurgaon. This is a good time to buy there. This is a time when you can actually negotiate the rates that you want in the Gurgaon market. This will probably last for another couple of quarters. There is 70% of demand for properties priced at about 1 crore and above. That is in line with the profile of the city. The demand remained insignificant for property below 60 lakhs. 60 lakhs seems to be an affordable range in the Gurgaon market for the profile of people staying there, and that is why lower than 60 lakhs the demand has actually dropped. There's an almost equal demand and supply for 3 BHK units. The demand is about 55%, the supply is about 52%. So if you're looking for a 3 BHK unit and you find something that you like, buy it, because there's not much scope for negotiation in that category of housing, the 3 BHK. The supply is actually lagging the demand. DLF phase 4 and 5 saw high supply of premium properties priced at rupees 2 crore and above. This is probably, if you look at DLF phase 5, that is because a lot of developments have been completed. DLF phase 5 is also the area where a large number of multi-story apartments by DLF has been launched. You also see in DLF phase 4 plotted development, and within the plotted development there has been a lot of movement in the Gurgaon market. That's why there is so much supply. As the consumer demand picks up, you will see that this supply will start getting used up. Noida is another interesting market. The city index and the listed price monitor did not change. There is a lot of demand, but there's a lot of supply in this market. Over 90% of localities noted a drop in rental values. That's probably because there's so much supply coming into the market that consumers have newer properties to move to, which are offering, and because there's so much supply, people are not asking for very high rental values compared to what is existing in the market. There's an equal number of localities which recorded a rise or drop in capital values in 0 to 5%. That's an insignificant change actually. 0 to 5% doesn't tell you where the market is moving. We would consider that a stable market. Sectors along the expressway and new developing sectors saw maximum activity. This is because this is very large quantity of supply coming up along the expressway and the new developing sectors. These houses are reaching possession stages, so end users are active in this market. The market offers a healthy return on investment of 2.14 to 3.4%, a good rate of return on investment, and a good market where you can transact right now. There's 77% demand for property worth above rupees 60 lakhs. The demand obviously is driven by people who are living and working around the Noida areas. The demand for plots has outstripped supply by 6 to 9%. In Noida, you are not allowed to register individual floors. As a result, the plotted developments are only purchased by those people who want to occupy the entire unit themselves, or they want to occupy one unit and keep the other, give the others on rent. Therefore, a lot of plot owners are holding back from listing their plots for sale, hoping that the registration of individual units will be allowed, and that is why the supply of plots has come down. Sectors 50, 93, 93A, 104 and 128 offer maximum options in the rupees 1 crore and above price range. Now this is an interesting thing to notice. Across the country, there has been a big step up in the demand for luxury properties. There has been a step up in supply as well. The supply has is now leading demand by a few 1 or 2%. Depending on the cities. In some cities it's about 4% over the lag is about 4%, but there's a healthy growth in the demand for luxury properties. Indian consumers are showing a propensity to invest. People who live in smaller houses are willing to sell and upgrade to bigger houses. People who have probably been invested earlier and their houses are ready, they are the ones who are selling and upgrading themselves. A lot of this demand is from people who are upgrading. Sector 73 and 110 offers maximum supply of properties priced up to rupees 40 lakh. In the Noida market, there is a big demand for this category as well. The Ghaziabad City Index remains stable, no change at all. 90% localities recorded a drop in rental value. We saw a lot of properties getting delivered and therefore more supply, drop in rental values. But it's a small drop. Unlike other cities, Ghaziabad noted a rise of 1 to 3% in capital values. This is also important because the consumer demand continues. The top 6 localities continue to be the most preferred areas quarter on quarter. These are areas with lots of supply, new properties, and there is active consumer interest in Ghaziabad. Indirapuram offers maximum return on investment of 3%, extremely well connected by the metro, and that is why there has been a big rise in demand. But 42% of demand was for properties priced at rupees 40 to 70 lakh. If you notice, this is a lower range than Noida and Gurgaon, but a good range where people looking for properties that are a little more affordable than either Noida or Gurgaon are looking at properties, and that is why 40 to 70 lakh is the range. There has been a maximum demand of about 57% for 2 BHK units, followed by about 28% for 3 BHK units. This is in line with the profile of the demand. Indirapuram and Kaushambi offer the maximum supply of properties in the 70 lakh and above range. That is considered the premium range in Ghaziabad. Kolkata, the city index rose by 1%. 90% of localities registered a rise of 1 to 8% in capital values. The reason why we are seeing an 8% rise is because some of the areas the base is very low. It's not that the Kolkata market has outpriced itself, it's just that there are some localities that were new which are coming into the market, and therefore starting from a low base, the rise of values has been significant. South and East Kolkata noticed the maximum development followed by the North. A good return on investment of 2.9 to 4.8%. Demand for 2 BHK units continued to outstrip supply. A lot of developers have built in the 3 BHK units, BHK category, but the demand continues to be for 2 BHK units. West Kolkata recorded the maximum demand for plots. Across India, there is a demand for plots from the city itself. The local demand has been for plots. In Kolkata, the demand for plots is from the city demand. About 45% of demand for properties are for the 20 to 40 lakh. This is because these are again that this is a city that is driven by local demand. There is not so much economic activity that there will be an active influx of people from other parts of the country coming into the city. Therefore, everything that you're noticing here is demand driven by the city people themselves. Demand for luxury units of 1 crore and above, about 10% demand. 2 BHK is maximum in demand, 56%, and outstrips supply by 12%. So, and Garia offers the maximum options in properties below rupees 40 lakh, active demand here. So, why would you look at the PropIndex? Who should be looking at the PropIndex? Today, there is one, the biggest reason why you should have locality-wise values and also sentiment, consumer sentiment there, which allows you to predict what will happen in the future, is because the government has allowed real estate investment trusts real estate investment trusts need to know what's happening locality-wise, quarter-wise, even shorter time spans, because that is what will allow everybody to compute whether your investments are right. Therefore, we expect that a lot of the governments, the information advisors, the bankers, the investment consultants, they should all be looking at PropIndex, housing sentiment index, and so on. It would be useful. In addition, if you're an individual developer, individual buyer, you have some means of figuring out whether your property decision is the right one. It helps you understand property type, size, configuration, budget, locality. That is for developers. If you're building, don't randomly build. Understand your market. And today the market, there's a method in the madness in the property market. Government offices and ministries of urban development, it allows you to understand where you should be intervening. For instance, if a certain area is the values are low, while across the street the values are high, probably a governance initiative is required there. Construction organizations can forecast demand and supply. In the last 1.5 years, markets have been slow. As markets pick up, you should be able to assess which are your potential markets. I think the rest of it, we've given you how it was computed, how the PropIndex is computed, listing of apartments based on capital and rental values, aggregated at the city level to create a city index, then aggregated further to create a national index. The weightage is based on the supply of properties within a locality and city. Therefore, it tells you that what is the actively traded property unit within that in that period of time. We have 12 cities, about 620 localities: Delhi, Mumbai, Chennai, Kolkata, Bangalore. Delhi is further subdivided into Delhi, Ghaziabad, Gurgaon, Noida. We also have Pune, Hyderabad, Ahmedabad, Vadodara, Noida, Gurgaon, and Ghaziabad. Quarterly rental and capital values you can get from the PropIndex. You can compute your yield on investment. There's extensive user demand analytics, demand versus supply statistics, and the top 10 preferred localities city-wise is showcased for you. You can figure out what, if within your budget, where all can you get houses and real estate news snippets. Thank you so much for listening to us. Aradhana, over to you.
Thank you, Jayashree, for the insightful presentation. I quickly introduce Dr. Venkatesh Panchapagasan to all the audience who have joined in. Dr. Venkatesh has almost 20 years of experience in academia and in global financial services industry after finishing his PhD in France from the University of Southern California. He has also worked with Goldman Sachs Asset Management in New York between 2005 and 2008, overseeing trading research for their quantitative hedge funds. He is certified in India as a chartered accountant and a cost accountant and holds a PGDM from IIM Calcutta. So, without further delay, I introduce you all to our guest speaker. Over to you, Dr. Venkatesh.
Thank you, Aradhana. Just wanted to wait for the screen to set up. Okay. Again, I wanted to join Jayashree and Aradhana in welcoming all of you. I am, as Aradhana said, I am heading the IMB Century Real Estate Research Initiative, which is a recent phenomenon in IMB. It's been out for 2 years now. And our primary objective is to promote scientific research on Indian real estate. One of our first projects was this development of housing sentiment index, which is what we're going to talk to you about today. And as Jayashree mentioned, there's a lot of research that can be done on real estate if done well. And things like PropIndex and other indices which capture property values look at transactions that have already happened. So one of our objective of setting up a housing sentiment index was to capture what buyers are looking for in real estate pricing 6 months away. So this is sort of a futuristic index. And we believe that this sort of a lead indicator will help a lot of stakeholders, including governments and developers, get an understanding of where real estate is moving, how the pricing is varies across different markets, and what kind of economic conditions are influencing the real estate pricing. So that was the motivation for us to set up this housing sentiment index about 5 quarters back. So we have now some level of comfort to know that our lead indicator is sort of capturing the price movements. So for example, things, what Jayashree was talking about, if you look at our housing sentiment index a few quarters back, which would be roughly in line with the time period that Jayashree had worked about for this quarter, you would see that either the prices have gone in line with our sentiment at that time or otherwise. So here, what I wanted to share with you is some brief introduction about how we compute this index, and also talk to you a little bit about how to interpret that index. And then I will hand over the audio space to my colleague here, Uma Sitaraman. She is the lead researcher for the Housing Sentiment Index, and she is responsible for all the stuff that you're going to be seeing today. The first thing to know about this index is there are many indices around the world which look at sentiments of either consumers or even real estate buyers in other markets. And they generally follow what is called a diffusion index methodology. What that means is that it looks at the general sentiment of buyers on whether prices are going to increase or decrease, and give lesser weightage to the magnitude of that increase or decrease. And then when we look at both the positive and the negative sentiment, we can come up with an average number which ranges from either 0 to 200. So the index can take any value in between these two numbers. A value of 200 would signify that everybody in the economy is expecting real estate prices to increase in the next 6 months. And a value of 0 would mean just the opposite. Everybody is expecting prices to fall. So the middle number, which is 100, is what our benchmark is. 100 would mean the population is roughly divided between an increase or a decrease in real estate. And so as you can see, right, there are two kind of interpretations you can have from this index. One is just the absolute level. So for example, a number of 120 would mean that on average, more people in the economy are expect prices to rise in the next 6 months. The other kind of metric that you can take away from this methodology is that you can look at the changes compared to the previous quarter or even earlier. So that signifies whether the number of people who are positive or who expect prices to increase is changing over time. And these two are both important in different ways. The absolute level sort of captures in general whether people expect prices to rise, and then the relative number captures whether in general the people who are bullish itself are changing. The percentage of people who are bullish is changing. So we have done this housing sentiment index for 10 major cities, which is what Uma is going to talk to you about, and with a main focus on the north and the east. But each one of these cities, as Jayashree mentioned about PropIndex, the development is done at the individual city level and within the city at the micro market level, and then we aggregate it up to an extent that we can actually come up with one index for the country as a whole. And our plan is to increase the number of cities to pretty much cover all the major cities in the country where real estate is an important phenomenon. And more importantly, we plan to come up with additional research which shows how much the housing sentiment index provides a good metric to determine what actually happens to property values as we move in time. So for example, this is talking about 6 months out. So that's exactly the quarter 3 of 2014. So you're talking about the festival season quarter. So you could actually expect how housing sentiment, if you had known this 6 months ahead, you have sufficient time to plan out your strategy. So at this point, I'm going to hand over the the audio to my colleague Uma, and she will introduce herself and get started.
Hello, everybody. So let me begin with the city of Noida. Hold on for just a second, please. Okay, before that, just to give you an example of the kind of analytics that we work on at our end, cities, we gather demographic information. So primarily, what is the kind of salary most people, salary buckets that most people fall into? What are the price ranges that they are looking at? And when do they plan to buy? So are they planning to buy, say, within the next 6 months, or is it a more of a long-term plan? And it's actually interesting what we have come across in the last 5 quarters since we began this housing sentiment index. There is quite a bit of a correlation between how the economy behaves and what people think. So when you get into a slow economy, you see that people are kind of postponing decisions. When you also see a major change, you see that people are hesitating to make that purchase, although they are very optimistic. So most often you find that people are optimistic, they think prices are going to go up, but they're ready to wait. Looking at this as an example, just taking the HSI by price range and focusing only on the northeastern cities that we cover. If you look at Delhi, 52% of respondents prefer housing below rupees 40 lakhs, which is, I mean, it says a lot in the sense that the government should actually be focusing on what we call affordable housing. So there needs to be a lot more focus on building houses for lesser price, but probably with the same amenities, probably with the same 2 bedrooms or 3 bedrooms that people generally prefer. Also, if you look at Gurgaon, like Jayashree mentioned, there's quite a high percentage that's looking at property above 1 crore when compared to the other cities, again because of the huge, like a well-earning class that resides in Gurgaon and wants, prefer 3 bedrooms over 2 bedrooms. Coming specifically to Noida as an example, this quarter, Old Noida witnessed a 19% increase in HSI. Also, 30% want to wait for a year or more, while like 40% want to buy within the next 6 months. Now, if you look at this over a quarter back, there were a lot more people who were wanting to buy. There was about 50% of people who wanted to buy property immediately, say within the next 6 months. But that has fallen a little bit this quarter. Again, some of it can be attributed to the change in government at the center, and probably people are waiting to see what's going to happen and how things are going to pan out, and then move on to purchasing. Again, when it comes to Noida, we had this Supertech case and the ruling by the court, so that has worked negatively in its favor. So if you look at it 2 quarters back, there was a 33% jump in HSI for Noida. But last quarter there was a fall in HSI, and this quarter you see only a very marginal increase. Although we know, and again, like Jayashree mentioned, there's also the supply-demand, like attribute that plays behind. We also look at, where people are working. I mean, are they into governments or into IT sectors? So if you look at Noida, especially interesting that government, pharma, self-employed, all of them came in with an HSI of 100 this time, which means that they neither think house prices are going to go up or down. But the IT sector is very bullish, came up with an HSI of 147. Moving on to Delhi. Now Delhi, similar to Bangalore, has been one of the cities that has consistently witnessed HSI growth in the last 3 quarters. Although this time it was, I think, at 13%, but still a good growth in terms of, when you compare it especially with the other 9 cities that we surveyed. So it's right after Bangalore in terms of sentiments. Again, comparing this with PropIndex, we should remember that PropIndex is more of a listings database, whereas we are looking at people who think, who are sharing with us what's going to happen to prices, say 6 months down the line, at least 6 months down the line. So people are pretty optimistic about Delhi. in the long run. But again, people are waiting longer this quarter rather than last quarter to actually make that decision, purchase decision. 54% live in a rented accommodation, and but there's still 26% who are looking to buy a house, and this 26% already owns a house. So that's again interesting in the sense that either most of them are going to look for an upgrade on property or are moving for other reasons. Again, 63% earn less than 10 lakhs per annum, and this is again consistent across all cities. We have a major portion that's earning less than 10 lakhs, which again, kind of strongly, suggests that the government should be looking at affordable housing. 28% plan to buy property for investment purposes, which means that they are it's probably their either their second purchase or it's only for investment purpose. Again, that tallies with what we shared earlier with respect to those who are living in their house looking for a second purchase. West Delhi witnessed a 30% increase in HSI this quarter, so that was a big jump this quarter. So just to share broadly the sampling techniques, we do an online survey along with Magic Bricks across 10 cities. Ahmedabad and Kolkata were added last quarter, and there's a standard question that's mailed out to all of our survey respondents, and based on these responses, we conduct our analysis and share key points with you all. And the complete survey is again available for you all to look at in our website, the IIMB website. And just providing you a brief summary of the HSI change this quarter. You can see that the northeast region, Delhi, Noida, Gurgaon, Kolkata, all of the HSI was up. And in fact, out of the 10 cities surveyed, 9 cities responded to the positive HSI this time. So that's a general overall, upward move. Aradhana, I'll hand it over to you.
Thank you, Uma, for this wonderful presentation. Let's quickly take up the questions now. I request Jayashree to read out the questions and their answers so that all our users may listen to your insights.
Thank you, Aradhana. There's Vinay Agarwal who wants to know, he's a broker from Kolkata, who wants to know that after the Kolkata Metro's expansion, will it work positively for the real estate? Vinay, nobody has we can look into the future, but I can use a few cities examples to tell you how it works. The metro has without doubt been a big driver for real estate across cities. So if you look at what's happening, while the metro is being constructed, there is a drop in values because, the tediousness of the construction and all the traffic jams and so on. So you will see that there is a loss of consumer sentiment there. But as the metro project advances and about 6 months before it is complete, you see that property values, especially rental values, start rising in that area. And once the metro is completed, it takes about 3 to 6 months to stabilize. But we have noticed that there is a 10 to 25% rise in property values along the metro routes. And most of it is, it's a half kilometer from the metro. You witness maximum rise in values, and it kind of diffuses away as you go further away from the metro. But this has been my understanding of the metro's impact on real estate. Now you have to keep posting to us how it has worked in your favor in your city. Venki, would you like to add anything to that?
Generally an increase in values when metros are announced. So the only thing is that the valuation increase happens at different points in time. The initial big jump happens very soon after the announcement is done. So there's a lot of people rushing in to capture the properties close by. And in fact, in Bangalore, for example, the couple of phases of a metro development is already out. So people already know when it's going to happen. I mean, whether the metro is happening at all. But when it's going to happen is something very subjective. For example, in in Bangalore again about, we have just started with phase 1. And but already we have information about what the phase 4 routes are going to be. So already people are speculating on phase 4, which probably in all likelihood is going to happen 5 or 6 years away from now. And so there is a variation in the time at which the valuation increases, but in general there is a bump, and I think it's 10 to 20% as based on the Jayashree's experience. We have not explicitly looked at it. We are right now working on a project. So maybe in another few months' time, I'll be in a position to tell you exactly how it changes.
Thanks, Venki. Let's go on to Pankaj Umar's question. He wants to know, why is it that the south part of any region is better equipped than the north? For example, South Kolkata, South Mumbai, South Delhi. You know, I think I wouldn't have any scientific explanation for this. But if I pick up each of these cities, if you look at South Delhi was, from central Delhi, if you look at the growth of New Delhi, from North Delhi and Old Delhi, South Delhi was the area that was created to the south of the Rashtrapati Bhavan, which had all the government colonies and a large number of private residential layouts were created in South Delhi because of the ease of access. South Mumbai, I would say, is the area where you have the best views of the sea, and that is where, and it was a commercial hub. So the commercial hub always has a it's always a big driver. In South Kolkata also, with Prince Anwar Shah Road and all these areas, there is, these are the old established premium areas, but having said that, the metro has kind of broken these rules in every city. If you look at what's happened in Delhi, you see a big bump up in demand in West Delhi, North Delhi, all because these were areas which were not easy to get to, but once the metro came, it's very easy to commute from there to wherever you're working. Also, there's another driver why new areas are getting established, and that's because the commercial centers, commercial hubs, which were, 1 or 2 or 3 in cities, have now started kind of diffusing, and it's all over the city. As a result, people find it easier to stay in places where the entire city is not moving in one direction. For instance, in Mumbai, at one point of time, everyone was driving to or riding to Nariman Point and driving away in the evening. Today, there are many business hubs. The BKC, Thane is evolving as a hub, Andheri is developing as a hub, and people find it easier to stay near the place that you work because traveling is also becoming very, very difficult across cities. This is, in a nutshell, what I have to say. Shall we go on to the next question? There is Somay Sinha, who wants to invest in the DDA land pooling policy. Somay, it's a little too early for small investors to invest in it. Let me explain this to you. There was a lot of land that DDA allowed people to aggregate land within the national capital of territory of Delhi, and a few norms were laid out. The maximum amount of land has been pooled in the Najafgarh region, where agricultural as well as rural land has been cornered by a lot of aggregators, land aggregators. Some people have started selling very low-priced multi-story apartments, but I would still say that since the government itself has not come out with all the norms, it's rather risky for small investors to go and invest. You may make a killing. Today they're selling at 1,000, 1,500 rupees a square foot. But think of it like this. They are selling it at these low rates because they think that the risk takers will come in. And a small investor typically should not take huge risks in the property market because it is a large ticket investment. And if it goes wrong, you probably will be hit very badly. Venki, would you like to add to that?
Actually, these sort of government proposals, I agree with Jayashree that you have to be a little bit careful to engage without understanding the details. In general, land pooling, which is done through the governments, have always worked sort of better, at least in the cities that we have looked at, compared to private land aggregations. I mean, there are some exceptions to the private ones, but in general, the government ones have a lot better clarity in terms of the layout, in terms of the ownership, and so on. So I would just exercise. I would ask the gentleman to exercise some caution before getting involved in a project like that.
Okay, let's move on to the next question. There's Kalyan Varghese who asks, is it a good idea to buy property offering 1090 scheme, 10% down payment and remaining at possession? Kalyan, at one point of time, the subvention scheme was declared illegal. Today, those problems have been sorted out. But remember one thing, when a developer gives you a subvention scheme, he is actually allowing you to defer your payment, and he's getting your money as the 10% money at a far lower interest rate than otherwise. For you, it does work because you are only paying a small amount cash down, and the rest of your payment will be deferred. But do check out, I'll put it like this. If you were to take the, not go for the subvention scheme, but buy a property in a construction-linked plan, check out what your outflow would be and what you would be gaining. Then check out whether the subvention scheme works in your favor. Because remember that normally if the developer has taken only 10% of your money, he's also telling you that my project is going to be take that much longer. So do check out the details with the developer, individual developer, before you go for this, right?
I have one point to add there. In the traditional way of subvention schemes, essentially the developer is borrowing using the credit of the borrower. So in other words, as Jayashree mentioned, if the developer is able to get at the rate of 20%, while the borrower typically would get it around 10 to 11%, then the developer is taking advantage of the lower interest rates that the borrower will be paying, and that's one of the ways in which they can provide these schemes in the first place, and that's exactly what RBI was trying to make it legal. So I wanted to again mention that, look, this is something that the developers have really promoted across the country, largely because the cost of capital for them has gone up quite a bit, and they are trying to take advantage of various ways in which they can lower it. You just have to be a little bit careful, look at the time delay, look at especially you have to time the cost of the time delay, and also look at the quality of the developer. I mean, to some extent, a lot of people that I know have taken these schemes are not looking to use it. They are trying to use it as investments. So, and again, the investment horizon could be quite different for different people. So just keep that in mind, whether it makes sense from a cash flow perspective.
Thanks, Venki. I think Soumya Sinha has come back to us saying, as per DDA Vice Chairman and circular issued, it will take only 3 more months for the land pooling policy to be notified and implied. Let me put it like this, Soumya. If it takes 3 more months for the government to issue all the details of the policy, after that, if you check out on the, even if you want to invest today, do check out on the master plan, because they have already identified the areas where common facilities, roads and so on have to come. But if you look at what's happening in the market, there are lots of, the sellers are all kinds of people, and there are lots of people who are selling to, buyers who don't know the lay of the land, and they are buying properties that are, eventually going to be taken over by the government. Now, if that is so, if you can read the map and tally the locality very carefully, then go in as a small investor. Otherwise, I would stick to my advice that small investors should keep out of the property market in the initial development phase. Go in when established developers are launching. Today, the people who are launching are small, very, very small local developers, and you know, the time frame for development to happen in the Nazafgarh area is also going to be rather long. So I'm not saying don't invest, I'm saying if you're investing, do ensure that you have very good advisors. Shall we go to the next question, Venki?
Yes.
Okay. Are the new developing sectors of Noida better than the old sectors which are already equipped with social and physical infrastructure? Asks Vikrant Singh. Now, Vikrant, Noida is a very interesting market because the government first put in all the infrastructure before releasing land. And you see, the government actually held back from releasing land, put in all the roads, infrastructure, expressways and everything. Noida is more or less a well-equipped city as far as transport and connectivity goes. Therefore, are the new developing sectors better? It is better in the sense that the property will be newer. In terms of connectivity, I think all parts of Noida are well connected. That is the one USP of the city. It is extremely well connected, and with the metro also crisscrossing, it's expected to go all the way through to Greater Noida. Therefore, connectivity is never an issue in Noida. What you have to ensure is the quality of the assets that you're buying. If you're buying into new developing sectors, you get ready-built gated communities with modern facilities, modern amenities, security is taken care of within the complexes. There are also entire stretches that are being developed by various developers. Therefore, you will see that these are all modern new apartments. But the older sectors are closer to wherever, you know, if you take commercial sectors like Sector 16A, Sector 62 and so on, again, check your convenience. What is the state of social infrastructure, which means water, power, electricity, roads, sewerage, drainage, proximity to urban villages, because that can have a huge impact on your on the quality of your life. What are the access points to entertainment and leisure options? These are all important things for you to consider. There is no right or wrong when to buy a property. For some people, buying in old city areas makes a lot of sense. For some other people, if the connectivity to where you work is good, then that is the right option. There are some people who have a very active life after your work. So you would like to have sports facilities, you would like to have entertainment facilities, then maybe the modern, newer developing sectors are good for you. So check out the asset quality, check out your lifestyle, and whether what you buy matches your lifestyle. Venki, anything to add?
Nothing. Just you said it very well.
Okay. We've got Rohit Taparia, who wants to know what kind of property holds better scope of appreciation in Kolkata. A plot in city suburbs or apartment close to the city center. If you look at what our results have shown, our research has shown over the last few quarters, we find that apartments close to city center seem to be doing better. Now, Rohit, I'd like to put a rider here. In Kolkata, like I mentioned, right now economic drivers are very poor. Normally, the new economic drivers, such as in most cities, if you take the case of Chennai, right, Bangalore, Hyderabad, Gurgaon, and so on, the new commercial hubs kind of happen near the suburbs. And because property values are lower, it's newer developments, more commercial space available. So the new economic hubs are what drive the new suburban development. In Kolkata, because the suburban development did not happen on the basis of economic growth, therefore the city center is what is driving the rise in property values. Therefore, I can only tell you that this is what has happened in the past. That doesn't mean that there will never be economic drivers in the Kolkata market. Once that happens, wherever the new economic drivers are, that's where the values tend to go up, because that's where the demand is. Venki, your comments,
Yeah,
anything?
I wanted to add a few points there. One is, historically, the city center has poorer infrastructure because a lot of the infrastructure has been overloaded already. So there is little scope in improving the quality of the infrastructure. But at the same time, the flip side is that the land supply is a much shorter, land is in a much shorter supply. So to that extent, the prices can be staying quite high for a long periods of time. And as Jayashree exactly pointed out, the real driver is the economics. So to the extent that the key drivers of industry or IT or any sector that is going to develop, they may take a lot of demand away from the city center. Till that happens, you can probably be assured that your investment in a city center is going to stay high. But as I see it in Bangalore, for example, the city center has been priced high. And part of the premium comes from its water supply, while the suburbs do not have the steady water supply as you need. But then it is just a matter of time before the government sets up the infrastructure problem right. And then again, you're going to see a shift in value. But just globally, whatever research has been done has always shown that the city centers generally lose value to the suburbs over time.
We've got Jaskaran Singh who has said, why investment should be done in Devra, Delhi? Can you explain the region from the perspective of an investor? Will the area be beneficial? Devra again is in the news because of the land pooling policy of the DDA. I have spent a lot of time explaining this. See, even if you're an investor, if you're a small investor, be careful. If you have a huge risk appetite and you know that whatever money you put, you have the holding power, and you also must be prepared that sometimes your investments can go wrong. If you're willing to take the risk, your returns will be very high. But that risk is really high right now in areas in Najafgarh and ahead of Najafgarh, which is Devra is one of them. Let me go on to the next question. There is Bapa Tripathi says, I have invested in Rajarhat, but I'm waiting for the area to develop. Only commercial or office areas are developed. Actually, Bapa, the problem here is exactly what I said a little while ago. If the commercial centers had actually become a driver by themselves, and there was a huge amount of economic activity that was happening, by now Rajarhat would have taken off like most other city suburbs. But because economic activity is a little slow in Kolkata, that's why Rajarhat is taking more time. But I am actually bullish about Rajarhat because I think it is well planned and there is a lot of residential opportunity here. So you will have to be a little more patient because it is a slower city to appreciate, but I still think that Rajarhat is a good place to invest. Hari Singh wants to know what is the status of the Bhiwadi real estate market. Hari, look at it like this. The Bhiwadi real estate market had its own drivers. Bhiwadi grew on the back of industrial demand. There were lots of industries around it and people preferred to take apartments there and stay in the vicinity. We have some really good developers like Ashiana who have developed there, and a lot of other local developers are also building in that area. Bhiwadi, more or less, Ashiana is the biggest developer there and a phenomenally good developer also. But let me tell you a little more about Bhiwadi. Bhiwadi is also going to be impacted by the Delhi-Mumbai industrial corridor. Both Ningla and Bhiwadi are close to the industrial corridor, and with the Prime Minister having already indicated that industrial corridors are a priority for this government, its prospects are very bright. It's a slightly longer term than you will see a lot of growth, but right now there is one can be bullish about the Bhiwadi market. Venki, want to add anything?
Don't have too much insights on that.
Okay. Let's go to Pallavi Tripathi's query. Please suggest an area close to Noida where I can invest. My budget is rupees 30 lakh. I'm looking for an area from a women's safety perspective. Now, Pallavi, this is a very interesting question. And a lot of women have been asking me these questions when I talk on webinars, when I talk on the Property Guide and Economic Times. I see that single women want to invest a small amount of money and live, and safety is the biggest consideration. Unfortunately, our market is not really very well equipped to handle the volume of demand. I think the latent demand is very, very high. Having said that, I can tell you which are the areas where you should be able to get properties in Noida within your budget. Sector 73, Sector 110, Sector 134 and Sector 151 are sectors on where we have demand, where we have supply on magic bricks. However, these are all under construction. Once these are all ready and once there is a lot more supply on the expressway, I would expect women's safety to be a prime consideration here. There are also a lot of studio apartments that have come up along these areas, and you will find that these studio apartments are, traditionally in India, size is what brought premiumness to a property. But now what's happened is studio apartments are small apartments which are compact, which are small, which are well within good gated communities. The security is taken care of, common maintenance is available, and you will find it convenient to stay there because all other facilities like clubhouses and sports facilities and all are within the enclosed gated community. So you have to be a little more patient, but do start exploring the Noida Expressway. You will find properties within your budget.
See, one thing here is that the safety is some common sense issue. So I don't think buying a property in a safe place guarantees you safety. You still have to take some very commonsensical precautions. And also, I just wanted to mention that house purchase is a longer term investment and safety can change over time. And as Jayashree pointed out, there are some areas at least where the development has happened which is conducive for safety. For example, having more studios, having more number of establishments close by where there is some amount of traffic all the time and so on. So those are sort of drivers that you can use to identify areas, but I think you should still be cautious no matter where you are.
Yeah, thanks, Vicky. Let's go on to the next one. We are into our last three questions now. We've got Dilip Goyal who says, what is the best time to exit the property when the property is under construction or post-possession? Dilip, you're a sensible investor. Property investment is all about knowing when to exit your property investment and reinvest in some other property. Let me put it like this. When a property is under construction, at different stages the price points are different. About 6 months from possession, the prices have gone up quite a bit and they remain stable for a while after that. When the property, from 6 months to possession to post-possession, the property values don't change significantly. They change after there is occupancy after that. So if you're waiting, if you want to exit, you should exit about 6 to 8 months before possession, or you should exit about 6 months after possession. Pinky?
Yes, I think as Jayashree pointed out, the rate of increase is different at different cycles, stages of the property development cycle. In general, the greatest appreciation is in the very early stage for investors, and after the development has picked up in the first 2 to 3 years of the property's life, because that's when the associations get formed. There are certain niggling issues that are resolved and things like that, which allows people to be more comforted by the fact that now this property can take off. Because some of the cases we have seen where properties have a very high appreciation, but once people start living in, the quality of the construction and so on opens up, and then people are reluctant to pay that same premium that they paid 10 months back. So if you are planning to sell or if you're looking at triggers to sell, you should either do it very early or wait for a few years after the property is up, where you now have some sort of a steady thing, a steady demand for that property.
Yeah. Let's go on to the next question. Gaurav Bhardwaj wants to know, can I buy a flat for 20 lakh in Tollygunge? I live in a rented locality near Regent Park post office area and I'm looking to buy in the same area. Gaurav, unfortunately, according to our data, the Tollygunge area, you need 40 to 60 lakhs to buy a property. But then normally, if there is an area where you would like to buy property, but there is not much supply in your budget, go a little further. Use that as the hub and look at the spokes where you can afford a property. There is always a property that is, you'll have to travel a little further, go into a slightly less premium area or something like that, and you will be able to find it, but you'll have to do a lot more search. Therefore, don't give up hope. Go check out the area and figure out what is available for you. Right? Venki?
I don't have anything to add on this.
Right. Let's go to Kalyan Banerjee. This is the last question that we're taking. Which is better for investment? Developer offering plot under a township or authority approved plot? Noida authority. Kalyan, it is a question of your choice. Now look at the profiles of both. When the Noida authority gives plot, it's the legality of the plot that is most important, and that's why a lot of people prefer to buy from a development authority. When a developer sells, you have to be very careful. When you buy, you have to check out all the approvals and the documents before you buy. Also remember that when developers sell, it is more expensive, and the authority plots are less expensive. The developer also bundles a lot of services along with that, which means that the maintenance, the add-on facilities and so on, which authorities may not give, but authorities also plan their layouts very well. If there are certain planning norms that are exercised by all development authorities. So if you go into any layout that is sold by a development authority, you will find that there is a certain number of small neighborhood retail. There will be access to community centers, to dispensary. There will be government schools in the area and so on. So development authority has to follow the set planning norms. A developer gives you the comfort features which allows them to take a premium. This was the last question. Venki, would you like to add anything to the discussion?
Just one thing. I think, as you mentioned, the authority developed projects generally, what we have found is that space is generally left. So whenever you have a well-designed plot from authorities, you have open spaces, the roads have the length of the gap between the road and the housing are met and so on. Whenever you have private entities developing it, because of the incentives that they have, they want to maximize every small space that they get. So in general, you might get a better property, but the infrastructure and the support systems around that property may not be as good as what you see in a developed authority developed projects.
Yeah. Thank you so much for joining us in our webinar. We will be having another webinar along with Professor Venkatesh Panchpagesan of IIM Bangalore and Magic Bricks. I will be representing Magic Bricks. We will shortly announce the date. Do keep a watch out for that. And thank you, Venki, for joining us. Venki, would you like to?
Thank you very much. Thank you for all of you. Thanks to all of you for joining.
And I'm really thankful to our guest speakers today for conducting this informative webinar with us. It was indeed a great session. I would also like to thank all our participants for their support in making this webinar a success. Thank you all for joining us today. Thank you, Jayashree. Thank you, Dr. Panchpagesan, for having us, and I hope you have a great evening ahead.
Thank you. Bye-bye.
Bye-bye.